Hello, welcome to this lesson. I hope you're doing great. Yeah, and today's topic is source document. Yes, source document. What is source document or what are source documents? Source documents are evidence of business transactions. They are normally issued when a transaction takes place. When business transaction take place, there are some documents that is being used. So we're going to be learning about them today. Yeah, there are types of source documents. We have the receipt, we have purchase order, we have invoice, we have debit notes, we have credit notes, we have check, and many more. So let's explain these various documents one after the other. The receipt. Receipt is a document that is issued to a customer to serve as an evidence of payment for goods and services. Yes, it is issued to a customer after the customer has make payment, paid for goods or services rendered. So when he buys things in the market or especially supermarkets, they write a receipt, and this receipt contains the description of the goods, the quantity of the goods, and the amount per unit and total amount of the goods will be seen in the receipt. It's an evidence of payment. The next is purchase order. Purchase order is also a document that is used during business transaction. It's a document that is used to request the supplier or seller to supply the goods stated. So the purchase order document is something a customer use to order for goods from the supplier or the seller. And that document will show the product the consumer want or the customer want, and the prices, then the quantity, how many of those goods the consumer wants. So that is what the purchase order is used for. The next is invoice. Invoice, this is a document which lists the actual goods, unit price, amount, and the terms of sales. Yes, an invoice is always sent with goods to their location. So this invoice will be able to give in a glance the type of goods, the description of the goods, the type, the quantity, the price per goods, or the total amount of the goods. Then the terms of sale. For example, there is a discount in the total amount of goods. That's the terms of sale. Or we can say there is a pre-order services. Yeah, that's after buying those goods. If there's any other services attached to it, this is what an invoice is all about. Then the next is debit note. Yeah, the debit note is a document sent by a supplier to the buyer to correct the undercharge in a previous invoice sent. Yeah, it's very simple to understand. It's just, for example, a supplier sent an invoice to a customer stating that the total cost of the goods is, let's say, 100,000 naira, but uh but at the end they found that it was an undercharge. An undercharge means the amount stated is less than the actual amount that should have been stated. So the goods, they wrote 100,000 and the goods actually cost 120,000. So you see that is an undercharge. The supplier will have to send a debit note to the buyer to correct that mistake. All right, so the next is the credit note. Now, the credit note is more like an opposite of the debit note. The credit note is a document that is issued by the seller or supplier to a customer when they are wrongly overcharged. You see, the debit note is undercharge, then the credit note is when there is an overcharge. For example, they are supposed to tell the customer that he or she is to pay 50,000 naira for a particular goods that was purchased, but they wrongly overcharged by writing 80,000 naira. Wow. So you see, the difference between 50 and 80 is 30. So that is an overcharge. So they will have to send a credit note to the customer to correct that mistake. Or also, a credit note can be sent when the customer or the consumer return goods. So when goods are returned by the customer, they can also be given a credit note. Customer can return goods for many reasons, for damage or not the exact goods that was demanded, and many more other reasons. All right, the next source document we'll talk about is the check. The check. Check is a document used as a means of instruction to the bank. Yes, it's a document that used to instruct the bank to pay money out of the current account of a person writing the check. So, if, for example, your dad owns a current account in a specific bank, your dad will definitely be given a checkbook, and he can sign a check of 100,000 naira for somebody with the person's name written on it. So that check is instructing his bank to pay the named person that amount of money. So it's an instruction given to a bank. And there are parties to a check, we must know. There are three major parties to a check. The parties, number one, is the drawer. Oh, like the example I gave, the drawer is the owner of the account. That means your dad owns the account, so he is the drawer. The next party is the payee. The payee is the person or firm to whom the check is paid. So the person whose name is written on the check, or the firm whose name is written on the check, that person is known as the payee. Then the next party is the drawee. The drawee is the bank where the check will be cashed. So we have the drawer, the owner of the account, the payee, the person who is receiving the money, and the drawee, the bank who is going to what? Pay the money. Okay, so there are some other terms that I would like us to learn about concerning the check. Now we have the open check. Open check. An open check is one without a transverse line drawn across its face. Yes, no line is drawn across the face. It's a plain check. This kind of check can be cashed over the counter. So when you go to a bank and you present that check, you will be given money directly right there at the counter in the bank. So that is an open check. And there is another one that is opposite of open, which is closed. So the closed check, it has two transverse lines drawn across its face. The open check does not have line, the closed check has line. And this line simply signifies that this check cannot be paid when you come to the bank and present it at the counter. No, it can be that the cross check simply means that the money should be paid directly into the payee's account, not to be given money over the counter. All right, so we have the next, which is the post dated check. A post dated check is one having a future date written on it. For example, today, let's say today is 20th of May 2002, then the check the check date can say on 31st May 2002. So you see, the check was signed on the 20th, but the payment will be made in a later date, the future date, which is was 31st. So if you present the check before that date, that check will not be cashed. So that is called post dated check. All right, so there is another one that is called the bank draft. Bank draft is a check drawn by a bank on itself on behalf of a customer. Yes, it is a bank drawing a check on itself on behalf of a customer. So it is, you can also call it a bank check. All right. So these are some other things you need to know about in this topic, source document. Thank you for listening. and have a nice time.